Yeah. So, how different is that from this managerial representation versus SOX?
Sir, in SOX specifically, if you see section 302, it clearly says that signing authority, that is CEO or CFO, they need to establish and maintain this internal control framework.
Hmm.
And the management, basically the next level, whoever is involved in the accounting and looking over the accounts.
Hmm.
So it is their responsibility to maintain those standards, that
Okay.
those controls are working effectively.
Okay. See, since time immemorial, so many auditing standards are there. Standards on auditing across the world, different names. Auditing standards on auditing, where which are the standards you have to follow while doing audit. All that is there. So and so many audit procedures are there from so many years. Now, what was the need for what was the situation which gave rise to bringing in Sarbanes-Oxley Act?
Basically, in US, there was many fraud happened in companies. Sir. 1 second. I think Enron case happened, and so many corporate fraud had happened. So
Enron, one of the biggest multinationals.
biggest, yes, sir.
So multinationals that fraud around yeah. So after that, Sarbanes-Oxley Act was introduced, right?
Yes, sir. Yes, sir.
Now,
Basically,
okay.
they went through that, they have done an detailed analysis and like how to make sure that the frauds are detected earlier and they are getting prevented. So they had come out with this act, and where they made clearly the responsibility of the signing authority and the company to have a internal control over financial reporting or a framework, uh, which which helps the company to achieve its objective, and also to give the financial reporting, reliable financial reporting, and comply with the laws and regulations, and to curb any financial fraud happening in the company.
No, so basically you're into audit for almost decades. So now the question is, how different you feel from normal audit procedures and SOX procedures? Audit in terms of audit.
So in terms of audit,
What
if
difference do
we
you
see
find between
internal audit is in. Sorry, sir. Please continue.
what difference you find between other audit procedures for any entity versus Sarbanes and Oxley audit procedures for an entity?
Um, when we come to this the SOX complaints, it is basically the COSO framework what has been adopted here, and for each activity performed in the company, which are in scope accounts based on the materiality threshold, there is a particular process documentation, process narrative prepared, how the transaction has been performed, and there are specific SOX control which are to be performed by the company. So once those SOX controls are performed, they have a strong hold on their financial reporting. And since we have all these controls established in the company, the chances of fraud or error is limited if these controls are operated effectively. And also there's a detailed guidelines also, and also in SOX complaints, I am covering only related to the financial part. Apart from this, there are IT GC audit also, which talks about in scope the IT part. the software what have been used, and they have established the controls for the use of what are the software companies being used to maintain the accounting records, financial data.
You
It
just
covers both. But
yeah.
when I come to internal audit, they will go in depth in any one particular department, whatever they have scoped it to see. In SOX, they basically look at the control, so the control is operating or not operating, and we do not go inside the process or like a day-to-day activity, how it is done, what it is done, who has done. In-depthness is a little bit limited in SOX. In internal control, if we see, we go to the process, and every each and single steps is documented, whether it is key or non-key. In depth, it is understand it. And even the reporting is different. In internal audit, the reporting system is different. In ICFR, it is the SOX, it is different.
You're mentioning ICFR. You're mentioning ICFR. Yeah. Please continue.
In SOX, even the external auditor, they need to evaluate the SOX control, and they also need to attest, or they need to give their opinion, like whether it is maintained or not maintained. In internal audit report, I don't think that requirement is there. It goes to the company management until unless something material or something.
Okay.
Yes,
You
sir.
mentioned about ICFR. Can you elaborate?
It is internal control framework, sir. How we have in India the ICFR, it is equal to, like, we can say SOX or something.
ICFR, Internal Control Framework.
Yeah.
And
Yes, sir, internal control.
you have mentioned about ICD, ITDC.
That is related to IT general control, information technology general control. Since
ITGC.
now ITGC. Since now, if you see, like the accounting process, it is not manual bookkeeping. Since it is all maintained in the system with the software, with the IT, so the control is required there also. If relating to the access and the technical aspects are there in those. So ITGC controls are also one of the backbone, you can say. Apart from operational controls, financial operation controls.
Okay,
Since
and
all the accounting, everything is happened in the software, so the controls are there, need to be maintained.
okay, you also mentioned about COSO. Can you elaborate on that?
Committee of Sponsoring Organization. So in Sarbanes Act, they're just told to a framework should be maintained for internal control, and here whatever the companies, most of the MNC companies, they use the COSO framework. Basically, in COSO framework, they have 5 components and 17 principles and 81 point of focus.
COSO, can you elaborate? KO? CO?
COSO, Committee of Sponsoring Organization.
Committee of Sponsoring Organization. This apply only in US?
No, this COSO framework, it is a framework, sir. It is not an act or something, like how we have ICFR. Similarly, this is the framework which has been used by the companies
So,
to keep the internal controls.
COSO, that is company?
COSO, Committee of Sponsoring Organization framework.
Committee of Sponsoring Organization.
Yes,
Why the word sponsoring is used?
Sir, this Committee of Sponsoring Organization is basically an organization with 5 associations, like it is made of, it is a combination of like American Accounting Association. These are the members. Financial Executive International, the Institute of Internal Auditors, American Institute of Certified Public Accounts, and Institute of Management Accounts. All these organization and bodies, they have formed this committee.
COSO.
Yeah, COSO.
In that 5, 17 and 81 are there.
Also, they have they have given the framework. It is called COSO framework. So in this framework, they have 5 components.
17 principles.
The COSO cube is there. In top, if you see, it will be like organization, the reporting and compliance. Operation, reporting and compliance. See, those are the 3 at the top COSO cube, and those 3 below it will come the 5 components: control environment, risk assessment, control activity, information and communication, and monitoring. These are all applicable for entire like entity, their subdivisions, organizations, and functions.
So basically, continue.
And under this each components, they have like subdivision, like maybe principles they have given. For example, for control activities, they have told like development of control, select and develop control activities, financial controls, select and develop general control over technology, that is related to ITGC control. And these control you need to deploy through policy and procedure for companies. And even if you see under risk assessment, there are further 4 principles. When we talk about risk, there should be an objective. What is the object of the company? It may be growth in sales and profitability. What are the objectives there? So this is the objective. So what are the risks involved in achieving those objectives? So we need to identify and analyze the risk. First we need to have an object, and what are the risks are there in for those objectives. So we need to identify and analyze those risks, and we need to assess the fraud risk. And we need to see, is there any changes in the objective, and also like what are the changes in risk. Maybe like some technology changes is there, then we need to analyze. Once this risk assessment is done, then to mitigate these risks, there should be a control. And basically the control environment is the main principle for other four components. Control environment is the main component, and subsequent components are other 4 components. So this control environment is basically with the board and the management. They are the one who need to demonstrate commitment to integrity and ethical value, exercising oversight responsibility, establishing structure, authority, and responsibility. They need to demonstrate commitment towards competency and enforce accountability.
So basically, the main difference between normally an audit means, normally in India we use the words auditor is a watchdog, not a bloodhound. So our objective is to not identify, our objective is not investigation in audit, but it can turn out to investigation depending upon the circumstances in the case, in the audit. Now the point is, the difference between audit and Sarbanes-Oxley is the very objective of Sarbanes-Oxley Act was to prevent frauds. Whereas the very objective of audit is not fraud oriented or investigation oriented, to find frauds or investigation. But basically the objective of Sarbanes-Oxley is, along with other audit procedures, to prevent frauds and detect frauds at the earlier stage. Processes and procedures that are followed to prevent frauds and detect frauds at an earlier stage. For that,
Yes, sir.
whatever controls are designed and whatever controls are implemented, the main focus is on see, in audit, statutory audit, internal audit, management audit, all that audit, general audit, objective is not only internal controls, various other things will be there. Along with that, establish, see whether controls are in place and controls are complied with, functioning properly, all that will be there. But the main focus of Sarbanes-Oxley Act is controls,
Yes, sir. Controls are mainly to prevent the corporate fraud.
corporate
This is the
fraud.
main thing, corporate fraud.
Hmm.
And by setting up the controls over the financial records to ensure that it is true and fair.
Okay. So, yeah, continue. You want
This
to
is
touch?
so like at an overall level we perform. So, but when the scoping is done, like for each process, there will be a detailed discussion with the control owners and the process owners, where we need to understand the process from the beginning till the end, and we need to prepare basically the flow charts of the key activities. We need to understand and we need to make sure we need to map the risk and controls for those process. Once control is in place, then when I say control, for example, if any journal entry is been passed with certain value, it should be reviewed and approved by manager before posting it. So for those JE controls, it will be like they need to perform those activity. Like without manager approval, there should not be any entry posted in the system for the particular value. And
Mm-hmm.
even if when we say review, we will see like what is the need of this journal entry, whether it is valid with valid documentation and backup documentation are there. So just to give an example, so when we do the operational effectiveness, we will go with the journal entry dump, and we will use randomizer and select the samples, and we will ask them the evidences, including like backup documents and the relevant approval. We make sure like we see that for each control, like for each samples, whether the objective control objective is met. We will have a testing steps like what we need to evaluate in each sample, and we need to take like whether it is a pass or a fail, whether this attribute has been performed like complied with or not complied with. For example, if an I value JE has been posted and if two approvals are required, if any one approval is missing and it went through, uh, then one attribute will be like it will be a fail. So for each sample, each attributes need to be complied with, and they need to satisfy the control requirement.
Hmm.
This is just a brief about what we do. Maybe if required, maybe I think maybe in PPT format or something standardized, like Enron, like what are the cases happened in US. Then based on that, the SOX Sarbanes-Oxley Act was introduced, and what this act, the key sections are there.
Hmm.
Basically, the requirement of management and the reporting, what are there, the key sections, all those things. Maybe if you want, we can put it in a PPT format or something, and maybe
Yeah. So, Sarbanes-Oxley Act came almost 2 decades ago. It was 2002
yeah,
introduction.
exactly. It is if this month end, it will be 20 years, sir.
Oh, June end. Huh?
Yeah,
So it
June end.
became effective from 2004. 2002 it was passed, but
Yes,
it
sir.
became effective from 2004.
Yes, sir.
So 2004, 2024, June it will become 20 years. So after
Yeah.
introduction of Sarbanes-Oxley Act and following the procedures as per SOX, any difference it has made? US government, does it really feel that yes, it has really helped? See, after introducing something, we'll at least come to know what are the benefits that it has achieved. The process or act or audit procedures, what they have achieved. So, any finding or after introduction of Sarbanes-Oxley Act, what is the success and any reduction of frauds or how will you judge introduction was successful and do you think something like that has to be introduced in India?
Um, Even in US, I think there is a dilemma between this SOX Act, since complaints cost is there for each and everything, whatever is there. They need to maintain the records, and there should be a team for this, and also like assessment from external auditor, and even some few companies which are listed which are not big company as such, and they also they will not have a SOX complaints team internally, and they need to get this SOX complaints work from the consultant. So there is a cost involved also, but there is a dilemma that few are of the opinion that this is not of any use for the management as such, and the cost involved is not a use to them. But few are of the opinion that there is a big controls are there in the organization, and it ensures that at least like the frauds, committing of fraud is very the chances are very less until unless the management is only involved.
Basically, we are not thinking. Sarbanes-Oxley is not thinking from the angle of management. Basically, it wants to protect the interest of the shareholders. Ultimately, who are the owners of the company? Owners of the company are shareholders and stakeholders. Shareholders or stakeholders. Now, management is entrusted with the responsibility to run the company, run the show. Now, but the owners or shareholders are the owners. Now, board of directors or management, CEO, CFO, the long list of hierarchy, it is shareholders will entrust the responsibility, the management of running the company. So, to protect the interest of the shareholders, to prevent frauds or early detection of frauds was the objective of SOX. So, now the point is we have to see from the angle of shareholders what the shareholders in US feel, the companies which are listed in US, the shareholders who own those shares. Now, if you observe the government angle and the stakeholders or shareholders angle, if you apply relevant costing, incremental revenue versus incremental cost, so whatever costs are associated with SOX compliance versus any benefit, it need not be incremental revenue. It can be stoppage of or reduction of losses in various forms which were due to frauds. So reduction of cash flows in terms of losses, reduction of losses which had occurred due to frauds in so many ways. So have they done any comparison? Any reports are there, and SOX did it really benefit to, because 2 decades have already passed. So, if you can observe the international, basically the object was to prevent frauds and detect frauds at early stage, and Enron was the main company for which SOX came in. SOX came in. SOX Act was passed. So in India also, so many big companies, runaway companies, and taking money, huge money, and vanishing from the scene. So is there any need for something like that SOX to be introduced, or can we in India, whatever existing audit procedures are there, standards and auditing are there, can we bring any change in the standards itself or procedures itself so that one more act need not be passed?
No, sir. In India, if you see, basically the SOX model, whatever is there in US, here it is ICFR, Internal Control over Financial Reporting. So even for example, in the MNC where I work, here also we have Indian operation. Indian entities are there. Even here, the local auditor will come and rely on the SOX control, what is there for the company at US level.
Mm-hmm.
The ICFR, we can say it is similar to the SOX controls or the Sarbanes-Oxley Act, whatever is enacted in US. And also there are some articles or in the internet where they say like the financial reporting has improved after the introduction of the Sarbanes-Oxley Act, and the quality of financial reporting have improved, and there is a low risk of fraud. They're not saying that it has eliminated entirely the fraud, but the risk have reduced it about fraud and financial scandals.
Mm-hmm.
If an organization, that is the tone at the top, the management, if they follow the controls strictly, definitely the frauds can be reduced. But if the management, the tone at the top, it is not so strong, then the risk of fraud will be more.
Mm-hmm.
It depends on the tone of the management, how they want it to be.
So that is the reason Section 302 has imposed responsibility on CEO and CFO, corporate responsibility, saying that this is the person who is responsible for or maintaining controls.
Controls, yes, sir. For framing the controls and ensuring that the financial statement, whatever they're reporting, it is like it is not of any misstatement of fraud.
So normal audit, signing the financial statement, it will not be only responsibility of the person signing, the authority, as a person signing. Whereas in Section 302, Sarbanes-Oxley Act, it is there.
Yes, sir.
Especially corporate responsibility.
It's a corporate responsibility, and if the company, like if they fail and if they give some false information, Section 906 is there. It talks about criminal penalties.
Mm-hmm.
If the information contained in Form 10Q or 10K, that is their quarterly filing and annual filing, what they file with the SEC, Security Exchange Commission of US, if it does not fairly represent the financial condition and results of operation of company. So they have Section 906 which talk about criminal penalties. And the person who signed 10Q or 10K is CEO and CFO. They are the one responsible. Maybe even if you see, sir, in India, the Satyam case, the promoter himself were involved. Even though it is a listed company in a stock exchange, the promoter shareholding obviously will be higher.
Correct.
In the company, more than 50% or 60%. The fraud in Satyam case was related party transaction. The promoter had one more company. So where he diverted fund from this company to the other company of his own. So when promoter and management persons are involved in any, like if they are involved, then it will be very difficult to stop or like prevent. Since even if you take management, like how we take management confirmation or like
managerial representation.
Once we get management representation, here also if you see, we go by their representation. Since the auditor risk is reduced to that extent, since management is telling they are giving the representation, auditor will tell based on their representation, we are certifying this or this we are excluding. So in those cases where management or promoter is involved in fraud, it will be very difficult to prevent. Detection can happen. Detection can happen due to the financial records and movement of funds. But prevention is where it is very
required.
difficult. Yeah.
Yeah. Any other points you want to convey in this session?
No, sir. That's not all.
Okay. We'll end the session here. 1 minute.